Alright, how's it going, everybody? Today I'm going to be doing a brief overview and tutorial of my personal trading strategy. I'm going to be doing a walkthrough of my trade execution strategy and my process for picking perfect entry and exit points on a given stock, or in this case, a futures contract. So it all starts with my watch list. And, like I said before, these are all futures contracts. I run through here, I check the Spark chart, which shows a 2 or 3 hour view of the movement of a given contract, along with the current volume, which is a major factor in picking a given contract, because you don't want to pick something that has really low volume, because those tend to move really slow and annoy me. In addition to that, they can sometimes make major moves out of the blue without notice, so we don't want that. So I look to see if there's something overbought or oversold, and it appears that /CL is a good candidate for me right now. So as you can see, the chart is showing steady slope upward, and let's take a closer look. Now this is /CL V19, which means front month ending in October, and this is the light sweet crude oil contract. Now, as you guys know, this has been running up rapidly because of the recent terrorist attack on Saudi Arabian oil fields and their refineries. It was suspected that it was either Iran or Iraq that took out a bunch of oil refineries, severely damaging the supply of oil, which I am to understand that Saudi Arabia actually supplies 5% of the world's overall oil. So if they were to take a significant dent in that, that would no doubt cause the price of oil and gas to rise worldwide. So people have been buying it like crazy. The price has been going way up. Yesterday it went up 13%. Today it's down 3.75%. And it seems that it is way back up on the RSI again. Now, this RSI is my main indicator. It is hugely important for me and my trading strategy. Now, when the RSI chart shows above 70, that means it's overbought. When it's below 30, that means it's oversold. Essentially, the RSI, Relative Strength Index, shows when it is above 70, there's no more buyers. When it's below 30, there's no more sellers. So, fairly simple, but not 100% accurate by itself. In addition to the RSI, you have the LBR Smart ADX, Average Directional Index, and this is actually a measure of the buying and selling pressure on a reversal consolidation, essentially factor change. It uses parabolic algebraic functions in order to gauge how much pressure there is towards a reversal in direction. So it looks for essential reversals. So the up or down movement does not necessarily indicate, like it does on RSI. The higher it is up on the scale, the more likely, the higher the probability there is of a change in direction, whether that change be upward or downward. In this case, it would clearly be downward, since all other factors hold that assumption constant. Now, the Rocket RSI and Stochastic RSI are effective RSI variations with different factors of measurement. So the Rocket RSI runs a 5-period measurement, with making it much more susceptible to movements in price, and it's much more sensitive to any type of price action or increase in volume on either side of the scale. This is the same with stochastic RSI, and I essentially use traditional RSI and the parabolic ADX as a comparison against the stochastic. So stochastic compared with traditional RSI, rather. And then you have the double smooth stochastic, which is the direct correspondence with the traditional RSI here. So it should really be right underneath the RSI because these are my two main indicators. Double smooth stochastic, or oftentimes the stochastic oscillator. As long as it's double smooth, that is a great indicator for anyone to put on their charting and technical analysis. Percentage ratio shows the percentage rate of change between high or low for the given time period. Just, a little additional context that it provides there. The LBR essentially is an all-in-one combination of many different functions and metrics. I set this up as a customized using my own proprietary formulas, and it essentially shows the difference between high and lows. It shows the average rate of change, average true range essentially, as well as any parabolic price movements, and then the purple in there shows exponential symmetrical moving averages, and that is factored with volume weighted average price. So I know that was a lot of jumbly words together, but essentially it's just an additional feature for me to use in my own analysis, and for me to feel better about my judgment on entering a position. So in the actual chart itself, you see here in the gray you have the volume along with the orange, purple, and pink lines here that you'll notice. This is actually the VWAP, or volume weighted average price, and this shows if a stock is trending upward or downward. If it is trading between the purple and the orange, then it is trading downward. If it is trading between the purple and the pink, it is trading upward. And this is not the best stock to show this. Generally, I use the VWAP on more equities and ETFs trading, but that is essentially what it is used for. So as you can see here, when we move out to 5 days, and then also we move out to 10, you can see here it generally stays within the bottom orange and top pink areas. And another good thing that you can use this for is if it does end up dropping below the orange line or shooting up above the pink line, you can with relative confidence, all other things held equal, you can buy or sell with relative high probability of success. Now also the purple line is a great kind of point of potential support or resistance, so you kind of use that as a baseline to determine any type of reversal in momentum or any type of oscillation from there. This is a great tool to be used for confirmations, which I can't stress this enough. Confirmation is key. It's not enough to just look at the RSI, take a glance at it, and then just make a decision from there. You need to watch it for a little while and confirm that what the charts and indicators are showing is in fact accurate. There is quite a bit of judgment and experience involved along with reading these indicators. It's not just a magic indicator. It's not a magic wand that allows you to trade with perfect accuracy just off of these indicators. You do need to have experience, and you need to use your best judgments in order to ensure that you can pick perfect entries and exits and close every single position in the green. So without further ado, let me jump on in here. So generally what I do is I'll buy 2 at a time, and I'll buy it a few ticks or a few deviations, standard deviations away. I say standard deviations, of course that's not really statistically accurate. I just say a few points, whatever that point is, whatever that deviation is. Sometimes it's $1, sometimes it's 25 cents, sometimes it's 1 cent, and which is what it is in this case. So you pick it one up, you buy 2 at a time. As soon as that order executes, you immediately just set your stop loss. So let me get these CS orders out of the way so they're not confusing, and then we will continue on our way. So, all right. So we're selling 2 more. We'll do it at 39. Two more. Uh-oh. It's dropping too fast. So, another really important thing. This is not what I'm doing right now because it hasn't actually executed any of my orders yet. But once your first order executes, make absolutely sure that you're only placing additional orders below it, but in a very small and strategic margin below it. If it starts going the wrong direction and things start going sideways, or you place a buy order and it starts going down, don't keep loading up. Don't try to average down to reduce your general cost basis. You can do it strategically, and I feel that it's very important to create a general average down cost basis where you're buying below your initial order execution. But if you're just doing it to try to average down and you're chasing a falling position, don't do it. Just execute your stop loss, set it up higher, set it up in advance to already and just know that you have a specific amount of loss accounted for. Never allow your trades to just go just like without any type of protection against them, because especially in the case with futures, it's so liquid, and orders execute and price movements happen so incredibly fast that it can drop by a couple percent in literally a blink of an eye. I've seen it happen. So that's why stop losses are just so incredibly important. And I'm sure you're probably wondering right now, why haven't I set any stop losses? Well, the reason for that is because I'm doing this tutorial and I'm not using my general active trader direct order monitoring system, in which case I would be able to instantly set stop losses along with my orders. But with that having been said, I'm going to set those stops right now. So what we do here is we close with stop, and of course we're gonna have 12 before we get done. That's gonna be at 36. 8 times 7 divided by 12. All right. Yep. $33. Oh, so I should probably change that to 40. Yeah, there we go. Though I believe this is already doing quite well for me. 740 up. So another big lesson that I think that I should impart is that you don't want to be greedy. if you've got a good order and it's going well, just, set a very reasonable and, conservative goal for how much you want to make on it, and just follow through with that. Don't sit there and wait for it to go up even more. It's just like, it's not smart. See, as you can see here, now I'm all the way down to 20. And if I wanted to follow my general scalping strategy, I would be using the direct order monitoring, and I would have probably already bought in and sold twice by now, just in the time that I've been talking. But I'm fairly confident and comfortable with where I'm at right now. I'm still executing, orders within my strategic margin and averaging down within my pre-planned schedule of around 10 cents. 5 or 10 cents below that, I've got my stop loss set. So any kind of crazy price movement, I'm covered. And the RSI is still above 50, so I'm also confident in the fact that it will eventually go down. So all right, let's see how many we've got. 10. I can do more. So I will buy just a few more, or rather sell, and we'll do that up at 40. This is probably as low as I'm going to go on any more sells. We'll bring it up to a solid 20, and then we'll be good to go. Now, a lot of people ask me why I do this averaging strategy. Well, yes, I know that generally I should just try to pick one point, but that's really not an effective strategy when it comes to futures, because they just move around so much, and nothing irritates me more. Well, of course, being wrong about a trade and losing money irritates me the most, but aside from that, nothing irritates me more than getting in and then having it drop down a bunch and then immediately jump back up. That is so annoying, because I always know that that's missed profits. And so I always set a range of different buy orders. Hello, back again. So as I was saying, we kind of got cut off there. I set a range of different buy orders in order to ensure that I am covered. Alright, so let's see where our position is at so far. Okay, we've got 10 orders in. And so what I'm going to do now is I'm going to actually cancel my existing buys here, and then I'm going to calculate a limit sell or a limit buy. Since this is a sell, essentially I'm going to be calculating a closing order limit, an amount of money that I am going to be happy with. So let's see here. We've got 34, 26. I'm thinking that around, I think 60 might be pretty good, but it's a little bit ambitious probably. So we'll go with half at 60, 20. Or we'll buy 5 at 60, 20. Buy another 5 at 60, 15. Or do 16. And then, you know what? How many do I have? I have 10. So I'll probably average up a little bit, get myself up to 20, and then I will close everything out at 60, 10. And that's going to put me in at, let's see here, times so yeah, that should put me up at around $1,600, and probably more than that because I'm going to average up a little bit more. So we'll see how that average comes out to, and I'll be able to determine my estimated profit off of this trade. I'm also going to set my stop loss up a little bit higher just because I'm feeling pretty confident in the outcome of this trade. So I'll set the stop loss at my break even, or just above it, because I do have a few orders that I wanted to execute. So we'll do 30, we'll do 39. Actually, you know what, I'm gonna leave it because I really hope it does go up that much so I can get all those orders back in. So I'll do 61.43. And would you look at that? Bam! A big drop. A big drop. Where the hell is it? What the hell? That's annoying. Why did RTY just open? So we just had a gigantic drop. Dipped down to 60.16 and executed a bunch of my orders. Perfectly calculated and perfectly executed. And there you have it, folks.